So does the travel area have the legs to hold up the consumer, or will we see some belt tightening this summer? Joining us now is senior airlines analyst at TD Cowen, Helane Becker. Helane, welcome. Good, as always, to have you with us. I expect you're going to tell me that consumers are still looking for experiences and that you expect a pretty lucrative summer for travel generally and airlines particularly.
I know, right? That's exactly right. That's what we're thinking. To your point, I think two things are happening. One, to the experience sector of the consumer, you're seeing more international travel than we've ever seen before. Interestingly enough, I won't tell you how many years I've been covering airlines, but it's, more than 4 decades. And what I will say, when I first started, less than 10% of Americans had a passport, and now 48% do. So you've seen this enormous increase in international travel. And one of the things we thought we'd have happen this summer was that the Atlantic would be in an overcapacity situation. But in the past 6 months, 2 things have changed. One, you've seen aircraft delivery delays, so the airlines haven't been able to grow capacity as much in the international markets as they might have wanted to. And the result has, and that's not only U.S. airlines, because the U.S. airlines were always going to be low single-digit capacity growth this year because they were first back in the market last year. But you're seeing European airlines cut capacity growth. So that benefits.
Let me bore in on your coverage list and ask this question. It seems to me, and you can correct me if I'm wrong, that you have a higher view of what I will call the larger legacy airlines, Delta, American, United, Alaska, than you do of the more upstart, budget-conscious airlines like Allegiant, Southwest, Spirit, Frontier, Hawaiian, et cetera. Is that right? And if so, why?
Yes, that's exactly right. And a big part of the reason for that is the international component. American is probably the smallest with 35% international, but Delta's about 45% and United is almost 50%. So they're benefiting. Asia Pacific is another area of growth. In addition to the North Atlantic, we're seeing good growth in Asia, ex-China, and Delta and United have the biggest component of travel in that market. So that's pretty much speaks to why we like those airlines better. Alaska's kind of the outlier because, as you know, they're a predominantly U.S. domestic-focused airline, but up in Seattle, they don't tend to play in Florida. I've jokingly said in the past, Americans only go three places, and that's South Florida, Las Vegas, and maybe Southern California. And those are the markets where we have enormous capacity growth. And as a result, fares have come down quite a lot. And so those airlines are having a little bit of a struggle in terms of generating revenue, and operating margins are under pressure. And then the other part of it is costs are up a lot, right? Labor costs are up a lot. And on a relative basis, since the big four, specifically maybe American, Delta, and United, they set the bar pretty high. And even though their labor costs were up 11 or 12%, the labor costs of the smaller airlines that you referenced are up 30 and 40%.
Interesting.
So that is problematic from a margin perspective.